Hello and welcome to today's analysis for the 6th March 2024. Starting off with the US dollar index, it faced continued decline, hovering below 104 on March 6 amid Chairman Powell's testimony and the ADP report. The market attention is on potential changes tied to incoming data, especially the upcoming February non-farm payrolls data. The labor market impacts on the Federal Reserve anticipated easing cycle beginning in June suggests a dovish stance in case of an employment slowdown, potentially leading to a weaker dollar. From a technical standpoint, though a short-term weakness is indicated, the dollar remains above the 220-day moving average, reflecting a persistent bullish undercurrent. In terms of technical indicators, the RSI and MACD points towards a bearish short-term momentum. The resistance levels is at 104.27 and 104.67, while support areas are at 103.62 and moving average at 103.24. The WTI spot crude oil slipped below $78 a barrel on Tuesday as anticipated demand from China failed to materialize and concerns grew over extended OPEC plus production cuts and surging U.S. crude oil production. The market grappled with subdued buying and amid expectations of the Fed rate cut, compounded by the geopolitical tensions in the Middle East. Despite the periodic conflicts and supply line concerns, the WTI crude oil struggled to maintain upward momentum and it currently hovers near the 200-day moving average at $77.72 with potential support levels at $77.6 and $75.22. The WTI crude oil faced pressure early in the week, dropping below 78, driven by the absence of expected Chinese demand and continued OPEC cuts. The record U.S. crude oil production and subdued buying amid rate cuts expectations weighed on the prices, with current levels testing the 200-day moving average at $77.72. The market's trajectory will depend on whether the prices can challenge $80 again or find support at $77.6 and $77.22, influenced by ongoing geopolitical uncertainties and the Fed Reserve monetary policy stance. The gold prices, which recently hit a record high above $2,140, are currently undergoing a technical correction. This is influenced by ongoing weaknesses in the U.S. Treasuries and a mild decline in the U.S. dollar. The current price is around $2,120, and the investors remain interested in gold due to concerns about the weak U.S. economic data. The positive signals from the indicators like the RSI and MACD suggest a favorable trend. The potential support at 2,100 and resistance at the highest historical level of 2,149. Despite talk of potential interest rate cuts by the Federal Reserve, the gold's appeal remains strong as it reached a 3-month high at $2,140. But overbought signals indicate a potential correction. The important levels to watch are psychological support at $2,100 and resistance at 2,149, with bullish sentiment supported by staying above key moving averages. Meanwhile, for the AUD-USD pair, it faced pressure and dropped on Monday, touching a multi-day low around 0.6477. This was due to an overall market caution linked to a stagnant ASX 200 index and a broader concerns, despite a positive performance in the Judo Banking Services PMI, which reached a 10-month high. The Australian dollar remains subdued. Traders are now waiting Wednesday release of Australian GDP data for the fourth quarter of 2023, which could impact the pair's direction. Looking at the daily chart, the pair is currently around the important level of 0.65. Resistance is near the 200-day moving average at 0.6559, with further challenges at 0.6595, the high of February 2022. If the pair breaks above this resistance, it could move towards the psychological level of 0.66. On the downside, the significant support is at 0.65, followed by last week's low at 0.6486. A break below this level might expose the pair to additional support around 0.645 and the February low at 0.6442. For the pound USD pair has gone up above 1.27, reaching its highest level since early February. This rise is due to a weaker US dollar after disappointing ISM services PMI data. Despite a brief dip in early European trade on Tuesday, the pair is still moving up, supported by trading above the key 200-hour moving average and an RSI above the 50 midline, indicating an upward trend. The upcoming U.S. labor force data and Federal Reserve Chairman Jerome Powell's testimony are expected to influence the pair's direction, with 1.27 and 1.2706 as immediate resistance levels. Technically, the pair bullish stance is maintained as it trades above the crucial 200-hour moving average, and a successful breakout could lead to further gains toward January 31 high at 1.275. On the downside, initial support is near Monday's low of 1.2646, with potential targets at 1.26 and February 20 low of 1.258. For the USD, Japan yen went down just below 150 as traders hope for a change in the Bank of Japan policy stance. The yen struggled to benefit from slight gains in Tokyo consumers price due to uncertainties about the Bank of Japan's plans. The pair's potential to go up is limited because the US dollar is facing difficulties with expectations of interest rates cut by the Federal Reserve in June. Technically, the pair has been moving in a sideways channel pattern on the short-term chart, suggesting a possible period of stable growth. The daily chart indicators leaning towards positive territory indicate an upward trend. The traders are advised to wait for a clear breakthrough above the 150.75 to 150.85 range before expecting more gains. If that happens, the pair might target 151 and potentially move towards 151.45. On the downside, attention is on the psychological 150 mark with possible support near last week low of 1.49.20 and the 149.27 area, followed by 148.24, the lower limit of the Bollinger channel on the daily chart. And then lastly, for our Euro USD pair, it reached an intraday high of 1.0876 on Tuesday, but retraced to the opening price following disappointing US ISM service PMI data. Trading within a narrow range around 1.085 during Tuesday Asian session, the pair faces a subdued market as traders await key central bank events this week. The Fed chairman testimony and the European Central Bank policy decision will provide insight into potential rate cuts, with possible risk sentiment and equity market tone influencing the safe haven dollar strength and limiting the Euro USD upside. Technically, the pair remains recent consolidation highs with familiar range and a near-term target of 1.0888 and potential upward movement towards 1.09 and subsequent weekly highs at 1.0932 and 1.0998. Breaking below the 120-day moving average at 1.0786 could trigger bearish momentum, with the target at 1.07 and further downside potential of the weekly low of 1.0695 from February 29. And that is all for today's daily analysis. Feel free to reach out to us for any further questions. Thank you.